Most people are sleeping on this stock and they don't even know it. But every time you blow your nose, wipe down a counter, or change a diaper in Mexico, this company gets paid. And it's been doing that since 1959. The ticker is KCDMY. And I think it's one of the most overlooked dividend plays in the market right now. In this video, I'm breaking down everything. The company, the numbers, the dividend, and whether this stock actually deserves a spot on your portfolio. I own shares in this one, so I'm not just talking, I'm invested. Let's get into it. So let's talk about Kimberly-Clark de Mexico. Now, before you confuse this with the regular Kimberly-Clark that you might already know, these are two different stocks. Kimberly-Clark de Mexico is in its own separate entity. It operates specifically in Mexico. The manufacturing, the marketing, the sales, all tailored to that market. They share the same parent company and brand identity, but this one lives and breathes in Mexico. Now, what do they actually sell? Well, it's everyday stuff that people use, such as diapers under the Huggies brand, Kleenex tissue, Kotex and feminine care, cotton owl, toilet paper, soap, paper towels, wet cloths, the list goes on, all under this company's roof. These aren't luxury items. This is the kind of stuff people buy, whether the economy is good or bad, whether the market is up or down. And that's what makes it very interesting to me. They operate through two main segments. The first is consumer products. That's your everyday household stuff sold directly to the public. The second is their professional segment. And this one I think gets overlooked. They supply hotels, restaurants, offices, and factories across Mexico. So you've got two solid revenue streams working at the same time. Now here's the bigger picture. Mexico has a growing population of 130 million people. The middle class has been expanding, consumer spending has been growing, and the country has been making real investments in education and infrastructure. That matters for a company like this because as more people move into the middle class, they're not just buying the generic off-brand product anymore, they're reaching for the product they recognize. Alright, let's get into the numbers. I'll keep this clean and simple. The market cap is sitting at $7 billion, so this is not a small company by any means. This is a multi-billion-dollar operation that just doesn't get talked about much in the dividend space. The 52-week all-time high came in at around $12.69, but historically it's seen higher levels before the currency and broader emerging markets headwinds pulled it back. Right now the stock is at $11.41, so you're still well below where this stock has peaked, which signals to me there's still room in the table. The dividend yield is sitting at 4.45%, and for me, that's a real dividend. Now, usually a lot of experts tell you to stay away from high yields. They usually suggest that you invest in dividend yields that are under 2%. I put my risk at 5% when it comes to investing in dividend stocks, but that's just me. Others do it differently. With that being said, this isn't just a company that pays dividends to look attractive. This is a business with a long history of returning money to shareholders. As for beta, it is at 0.41. For anyone who doesn't follow that number closely, a beta under 1 means the stock moves less than the broader market. So when things get choppy, this one tends to hold steadier than most. That low beta combined with a 4.45% dividend yield, that's a pretty comfortable place to park your money. Price to earnings is at 16.12. That's reasonable. You're not overpaying for this company relative to what it earns, which is another thing that makes it interesting at its current price. Alright, so now I'm going to be transparent with you guys and show you my position in this stock. I currently hold 7 shares in this stock with an average cost of $7.35. Now, before you say anything, yes, I know 7 shares is not a massive position, and I know that. But here's the thing. I bought this at a really low price, and I've just been waiting for that price to dip again so I can buy in more shares at a discount. So I'm watching and I'm waiting. I'm waiting for this stock to dip some more so I can buy in more shares at a discount. Currently, if you take a look at my position, I'm up $28.40 with quarterly dividends pouring in. Alright, the part you probably have been waiting for. Is KCDMY actually worth investing in? Let me break it down honestly, starting with the pros. Consumer staples don't sleep. People always need these items, and it doesn't matter what their economic situation is, regardless of what the economy is going through. People always need these items, and they would rather cut back on vacation, new clothes, eating at fancy restaurants, but they always need these items. Now, I understand possibly if it got super bad, like depression levels bad, but that's the foundation that this company is built on, and it makes the business model remarkably resilient. Second, that dividend. Now, this isn't just a company that slapped a flashy dividend to get investors to buy into the stock, but tank in value. They actually have a consistent track record of paying their shareholders, and that dividend is quite nice. It does fluctuate though every quarter from what I've noticed during my time investing in the stock, but it's not by a lot. They'll maybe just cut the dividend by 1 cent, or they'll increase it by 1 or 2 cents. So that dividend is actually pretty good. Now the third pro is Mexico's growing population. The population right now is at 130 million people, and it's growing. On top of that, the middle class is expanding as well. The government has been putting in investment into education and infrastructure ever since AMLO was in office, and with time that will lift a lot of people up to the middle class, which means more people will start buying these products over the off-brand products. Now, if this stays steady for decades to come with the growing middle class, this only means good news for the future, and I'm actually pretty optimistic for the future here. Now, I'm going to be straightforward with you guys because there are some cons when it comes to this one. The first being the currency. The Mexican peso is very volatile. When it weakens against the dollar, those revenues and profits tend to shrink. It's not a deal breaker, but it's a variable. In addition to that, the volume on this stock is very thin. The average trading volume on this stock is at around 38,000 shares a day, which is pretty low. That means liquidity isn't what you'd get on a major stock exchange, and the spreads can be wider. I've noticed this when I actually bought into this stock, that the margins of when you buy the stock is pretty wide, and having that transaction process does take a couple of minutes, so the trading volume is sort of a con here. And on top of that, the analyst picture is pretty mixed. The analysts have put their percentage with a 27% buy and a 73% hold. Now, they're not saying to sell the stock, but there are a little bit of concerns and reserves on going all in on this stock. I think the safe play here, from what analysts are saying, is to just hold for now and maybe invest conservatively and not go all in. What that tells me though, that it's pretty steady and safe, but nothing to go all in on. And the final con would have to be the competition. They do have competition with the local Mexican brands, and they could be offering much lower prices, which is more appealing to the average Mexican consumer. On top of that, they also have to compete with other multinational brands, and they're all pretty much competing for that shelf. So when someone goes to the grocery store, they're looking at the prices, and if Kimberly-Clark is offering a higher price, the consumer would just have to go with the better deal. Now, here's my take. I actually really do like this stock. I think it's underrated. I think the long-term story of Mexico is going to be growth, and that's very compelling to me. I'm not saying that this stock will grow my portfolio by 5 times in the next 6 months, but that dividend and that slow growth is what's keeping me invested, and I'm not buying right now at this current price. I'm waiting to see if the stock dips below $10 so I can buy more shares and grow my position into the stock, and hopefully 5 years from now the stock could be trading at $20 and I have grown growing my investment into this stock. On top of that, the dividend payments that come in every quarter. So that's exactly where I'm building my position on this. But I want to hear what you guys think. Am I wrong about Kimberly-Clark in Mexico? Drop your thoughts down in the comments. I read all of them. And if you're trying to get started with investing and build out your portfolio, check out some of the links I got below. If you sign up with Robinhood using my link, you can get a free stock that is worth $500 to $200 just for opening an account. And this is free. You don't gotta put any money down. You just gotta open an account and you get a free stock. So it's basically free money for you. And if you use my Coinbase link, you'll get $10 in free Bitcoin after your first trade of $5 or more. And it also helps support the channel. If you got any value out of this, make sure to hit the like button, subscribe, and I'll see you guys in the next one.